do you think that the stock market then is the tinderbox time bomb? Do you think that
okay, so let me tell you, again, let me put it in a framework, because this is Universa, there's Universa here. Our strategy at Universa does not depend on what we think of the stock market. So it doesn't change whether Brandon believes that it's going to be rosy forever and Mark, or whatever. It doesn't, or if you think that so the strategy here is not about timing markets or environment. There's a structured policy of having geometric payoffs and the tails. But to go back to the environment, I believe that the stock market is way too overvalued for interest rates that are not 1%. So unless they miraculously bring back interest rate to 1%, which they won't be able to, you will have interest. I mean, it's unsustainable. Why should you put your money in the stock that gives you 2% dividend yield, if you're lucky, when you can get 4.75% from the bank while playing golf? Explain to me, right, the logic, right? So this is why the stock market has to adjust to normal levels. And again, we haven't had that much growth over the past 25 years to justify this valuation. So it's just air.
So then that's a good point to start to talk to you about inflation and the direction.
Yes.
There's an idea in the markets that the Fed has started to get more of a handle on inflation than they had a year ago, that finally you're potentially starting to see inflation peak. But do you believe that the Fed has control over inflation to the point that it can come back to a more natural level?
I think the problem is beyond inflation. The problem is the structure of the modern world in which we live. The structure of the modern world is overreactive because we are, the world is getting more efficient because of globalization. So it's more reactive. You sell, say, 100 million year one and 100 million year two. Okay, the prices are going to be stable. But if you sell 0 year one and 200 million year two, you're going to have a huge explosion in prices, because if you don't sell anything, things shrink, and they shrink rapidly. Capacity shrinks rapidly, and then you have bursts. So you have good news and bad news. The bad news is that things react very quickly. Look at what happened, how fast that these prices adjusted up after the recovery post-COVID. But so the best of bad news, the good news is that all these squeezes resolve in gluts, and this is much faster than in the past.